So basically, I wanted to go back to the standard. I could have summarized it, but I think I like the question that you asked to say, let's not assume that it is known what a functional currency is. So basically, it is not. I would be cautious in putting a blanket kind of like a proposal that public sector entities are supposed to be their functional currency is the ZIG, because we actually at the moment I can give you examples of institutions that are now collecting funds, and much of their revenue, actually more than 60% of their collections, are now in US dollars, and they are a public sector entity. So I think care must be taken. Yes, we've got the law which says that thou shalt use the ZIG and everything. But I think to support the point that Owen made, supported also by Tinashe Mrelekwa, and also Webster spoke about it, we've got to go and look at the operating environment, or it's an entity-specific circumstances. Having said that, I also want to comment on the issues to do of not-for-profit institutions like NGOs. We've got two types of NGOs. We've got NGOs that receive local donations. Those ones, obviously, they have to make an assessment to say what form do they come. Do they receive the greater part of their donations in ZIG, or it's a mix? If it is a mix, I think we go back to the standard and say exactly how does it work? How does the ZIG fare over USD? Then obviously the ones that are financed purely in USD, those ones, of course, they may need to assess, but they don't. Their work is not much, because they may continue to use the USD as a functional currency if they are being financed from a USD point of view, and they expend in that currency. So I'll end here for now.
Okay, thank you very much, Mr. Chatima. Owen, you have some input?
Thank you, Tari. In fact, Mr. Chatima really took the words out of my mouth. Substance over form, I keep saying. The functional currency cannot be legislated. It's a function of what really is prevailing, is the conditions that affect an entity, underlying transactions, events, and conditions. The standard says the functional currency is the currency that reflects underlying transactions, events, and conditions that are relevant to it. So Mr. Chatima just captured it very well. You can't necessarily legislate a functional currency. So entities must make this assessment on their own. And you will find that this has to be continuously done if you look at where we are coming from and where we are going. The intention is for us to de-dollarize, right, by 2030. So chances are you will have some entities with the functional currency of the US dollar now, but as we start moving into the future, that balance will change. But it's something that entities must assess regardless of their particular industry or their sector. They have to make that assessment. I think Elliot said it, the currency that mainly influences your sales prices, right? And the countries, the currency which the country's competitive forces and regulations determines sales prices. We've seen regulators publishing US dollar tariffs for certain services. So already all those are factors that must be considered as entities come up with their functional currencies. So I think that's really what I wanted to say, pretty much echoing what the previous speaker said. Apologies for that, but really that's the point, to say it is an individual assessment, and the functional currency is defined, IS 21. If I go into it, people will probably sleep, but IS 21 paragraph 9, that's where you really start to get the details of what this means. Thanks, Terry.
Okay, so just picking up from this discussion, I'm picking that for starters, it's an individual entity assessment based on its operating environment. That's one. Two, there is a functional currency and a presentation currency. Those two are also two separate things. Am I right in that assessment or in that conclusion? Or could there be more clarification around that so we're extra clear?
100% you are right, Tariro. The functional currency is determined by the environment. It's not your own choice to say that I have a functional currency like this. And the presentation currency is by choice now. You choose what you want to report you in. So you find that if a government entity is having 80%, 90% of its transactions in USD, and then they decide to present in ZWL saying that's the functional currency, they've just done something wrong. And if I was the auditor, I would be qualifying. So definitely, there are two different things, functional currency and presentation currency.
So just for the participants, I think that's one clear thing I'm just picking. For starters, let's have it as a separate entity assessment. There's no one solution fits all, I'm sure, with this implementation process, and also the differentiation between the functional currency and your presentation currency, because I'm picking their various types, obviously, the public entity, the private entities, the NGOs. So it's an individualistic assessment. And obviously, you need to then take into cognizance the statutory and policy issues around reporting. What then do you report in? Because it's probably a requirement, but your functional currency can be something totally different. So it then obviously changes the discussion and the implementation process going forward. Still picking up on that and the reporting, it then brings us to the transition now from you've assessed yourself as a functional currency or ZWL entity. You are now transitioning to ZIG. How will comparatives look like? How then do you deal with the process of conversion, and what are people experiencing at the moment?
Okay, Tari, if you can allow me to go first on that one. Yeah, so basically, I would focus first on the latter rather than the former. I want to talk about experiences in terms of conversion and the experience we've had so far with our clients in terms of that process. So basically, what you see is that unlike what you expect to then say a currency be introduced on a like at the cutoff date, maybe 30 or 31 end of the month or end of a quarter, whatever it is, we've got a problem where the currency was introduced on the 5th. So what that does now is that we are back to SI 33 of 2019, in which a currency was also introduced midway. What that simply implies is that we are going to have two currencies in the same year. So if you like, those are two trial balances that you have. We've got two TBs that we have in the same year. But when you look at the mechanics of it now, the nitty-gritties of it, is that the conversion factor, the process rather, I'm speaking specifically on what's going to happen even when the audit process starts. What we are expecting from clients is that clients must be able to have a detailed procedure that they followed in terms of this process. It's not as simple as people think it is. What is expected, number one, is to look at the balances and say, where our debtors, our creditors, especially your debtors, are going to give you nightmares, especially if you are very significant, if you've got significant clients. So they have to be reconciled as of that date, all of them. But of course, sometimes it's not very easy to achieve that. But that's the starting point. You must be able to reconcile your receivables, your payables. After that, then you have your dummy data that you then test to say if you're going to run a script in the system, like your ICT people are going to run a script in the system to do the conversion, like what banks did. They've had to do end of day run by 7 o'clock when this currency came into being. The whole idea was to make sure that these processes are prepared for. So once you do that, you must also show that this is the dummy process that you did, and also there was some assurance process. And I think it's one of the things that the learning point that we got in 2009, where many entities did not do an assurance process in terms of balances. And then it came to bite us, I think, end of year. So I think that's one of the things that must then happen. And then also the rate to use. Yes, of course, we are going to use the rate that has been pronounced by the RBZ. which is 13.56. But I would then say, when you've done the conversion, you must also do assurance post-conversion to say, did we convert properly? So just to look at it, I would urge that even internal auditors would then have to do an assessment, or rather on an audit on a sample basis, and see and satisfy themselves that the conversion process has happened. What are the challenges that are coming through? Number one, not all the receivables will be reconciled by that date. Number two, issues of billing. So there are there is billing that is going to be done post the cutoff time. There are orders that were issued in ZWL, which were not settled, and some of them they remain unsettled. Goods have not been actually supplied again. So there has to be a process in terms of what is the procedure that you are going to follow to demonstrate that you have converted all the balances and all these transactions properly, to make sure that your opening balances are actually correct. I could go on and on, but let me leave it for my fellow colleagues to also share their experiences, and maybe question on the discussion later on.
I also come in. Hello?
Yes, Mr. Melinda, we can hear you.
Okay, fine. Right. The conversion for Zimbabwe dollar bond to Zimbabwe ZIG now, I think for 2024, year 2024, we might need 3 sets of accounts. Number one, January to March, or to the day when ZIG was introduced. We have a TB for those 3 months, and then we were given the conversion rate of 2,500 from bond to ZIG. Assuming you have taken the ZIG as your functional currency, then it means your ZIM is changed to ZIG, right? Then you now have your trial balance as of 6th April, which is based on ZIG after the conversion. Then thereafter, if you have still adopted this environment or nature of operations, then you proceed with the ZIG. But now, during the month of April, the ZIG and bond were also working. So it means in all cases, you might need to do some adjustments from either the ZIG to from the bond to the ZIG for the transactions which took place in April. Then probably from May to December, you are now sticking to the one currency ZIG which you are now using. Because the bond, I want to believe, from the day the ZIG was then released, the bond fell away. So transactions for January to March are different. Transactions for April have got ZIG. So again, in that month of April, we need to do translations. We need to do adjustments, and then we add on, and thereafter we then apply the ZIG if it is the chosen currency. If it is the US dollar which you have chosen, then it means you will continue to make adjustments for all those transactions which you are receiving in ZIG. So in my view, it is necessary to do trial balance for January to March, and thereafter you have a single transaction for the month of April only, and then you collect it with January to March. Thereafter, you apply the rate which you have. Thank you.
Okay. Thank you for that, Mr. Mrinda. Anyone else with a different view before Yes, Mr. Chukuma.
Hello.
Okay. I find go ahead.
So I can go on. Maybe I would just want to add something to the conversion processes. as you can see that the pronunciation happened on the 5th of April, which was a few days into the month of April. And for people to be allowed enough time to do the conversion, what other guys have done is that they've continued to use the ZW until the end of April. They've done this by actually creating another currency, a ZIG currency, and put an exchange rate. This was on the assumption that these guys were using the ZWL as their base currency. So what they've done is they've continued to use the ZW as the base currency until the end of April. So at the end of April, what they've now done is they've now migrated into a new company or a new database, whereby they've just simply migrated their master file transaction to a new company, which they've set for the ZIG transaction. And at the same time, they've now come up with the nominal ledger balances for those ZW conversion at the end of the month, and also the conversion of the sub-ledgers, so that they can now import the ZIG transaction into the new companies. So this is in practice how others have just done the transition from the ZWL to the ZIG transaction. Thank you.
Okay, Mr. Chatima.
Okay, what I wanted to also add is that we have also seen challenges. I think I like the point that Mr. Chokun, the previous speaker, I'm trying to look for the name now on the list of panelists. So I would like to agree with the previous speaker, but my point of focus is on the challenges we have that are brought about by these pronouncements. So you have a scenario where the central bank governor continues to say ZWL must continue to be accepted. Previously, there was a timeline that was put in there that was not a problem. But now that the governor maintains that the money should continue to be coming through, one of the challenges we have is to say, at what exchange rate, if I'm going to accept the ZWL, what exchange rate am I going to put between the ZIG and ZWL? And do we have a market where ZWL is traded to the extent that we can be able to get an exchange rate between the ZWL and the US dollar? So I think this is one of the challenges we now face, to say during the transitional period, the authorities may have overlooked the issue that we don't necessarily have an active market for the ZWL, unless if we have got significant transactions that are going to be transacted between the date of pronouncement and the date where obviously we then say we're no longer using ZWL. What that means is that we may have to clarify, to come up with a clear position to say, how did we convert the ZWL that we received after the cutoff time that had been put in there? What exchange rate was being used, and also how material are these transactions? Because I think that's one other issue that's going to be there. Then I think my final point on that is to say, one of the challenges we are going to see is what happened in 2009 when the exchange rate was pronounced by the government, and what then happened. We were told that it was one-on-one according to SI 33 of 2019, and then subsequently the opening exchange rate, I think it was about 2.3 to
Okay, we seem to have lost Mr. Chatima there, but he was touching on the issues to do with the exchange rate. And I see it's quite a tricky issue now to say, how do you then convert the ZWL to ZIG? Is there a rate on that? Webster, you have some input?
Thank you, Terry. So I think, not taking away what Elliot mentioned, I think the exchange rate story is a big story which we'll probably need to discuss in depth. during this session. But I wanted to come back to the story of as we transit from the ZWL to the ZIG. And I think the first issue is, what is the date of change in functional currency? Remember, in 2019, we had the same story where one can select an incorrect date. Now, I think fortunate enough for this time, I think maybe the time band may be a bit smaller between the time of the pronouncement and the time of starting to using the currency. But on the 5th of April, I think largely this is the pronouncement date, but the currency was not yet actually being used. And then we start seeing the usage of the currency happening at a later date, I think within the space of the 20 days which were given until the end of the month. So I think the first story for me is, what is the date of change in functional currency? Then the second story is on, we have got two types of changes in functional currency as directed by IAS 21, which is the first one, you are changing your functional currency when you are moving from a currency which was not in severe hyperinflation into another currency which is again not in severe hyperinflation. So you do the normal translations based on IAS 21, which are the translations that we're talking about here. But if you remember the 2009 story with the different transitioning process, hyperinflation, and then now getting into a normal currency, then you don't use the normal IAS 21 transitioning process or translation processes. Rather, you are directed to IFRS 1, which is where you start over again. And the big question is, why did the Zimbabwean dollar get to be stopped? Were we in severe hyperinflation or not? And part of the questions are, when you're in severe hyperinflation, remember, the standard actually gives you indicators of what is a severe hyperinflation. And one of it is when you now have exchange rate problems between that currency and another. Number two, when a reliable GPI cannot be found for hyperinflating. So the question is, were we at that stage? Because it determines the type of transitioning that we will then apply. I think for now, I'll stop there.
Okay, because you're already tickling the mind. I will take over to the CEO of ICAS, Mr. Mandisoda, but I'll come back to you, Webster, because you raised a lot of sticky issues, which I'm sure people are having challenges with. Mr. Mandisoda.
Maybe, Tari, before Mr. Mandisoda comes in.
Yes, sure, Mr.
So
Safalda.
I wanted to pick up from where Webster left.
Okay.
So there's continuity here.
Sure.
So that I can just respond to the way we look at some of the concerns he has raised, so that we can maybe have a debate. So Webster raises very, very pertinent comments around whether the situation we currently have points to IAS 1 or IFRS 1 instead of IAS 21. So we debated this internally, and we came to a conclusion that we are not necessarily adopting IFRS for the first time. And some of the arguments which were used were that almost every opinion was qualified, and no one was actually complying with IFRS in Zimbabwe lately. But the standard itself says a qualification in opinion does not necessarily mean that you are restarting. So it covers the situation we are currently in as a country, where majority of the financial statements were qualified, but preparers still asserted that they were preparing those financial statements in accordance to IFRS, and therefore we don't have to go back to first-time adoption. Having concluded on that, the next building block was that then what does IAS 21 say? Read together with IAS 29. So IAS 21 just gives the principles of how you do it in a normal country, zero hyperinflation. But if you then look back to IAS 29, it then directs you to how you transition to a currency which is non-hyperinflationary, which is a huge assumption which has been made here to say we are restarting and we don't have the characteristics of ZIG to determine whether it's a hyperinflationary currency. And then therefore we can't assign it as a hyperinflationary currency. So the principles of IAS 29 that say you then take on the closing balances or opening balances, which are in accordance with the IAS 29 and convert it to a new currency using the principles of IAS 29. I think this is the rationale or the building blocks to the conclusion which my colleagues have presented.
Okay.
Okay, Tariro, just to speak to what William is saying, I think there's been two things that have been a problem of late in terms of financial reporting. The first is the exchange rate, whether the official exchange rate captures what is happening in the market, and then secondly, whether the inflation figures first of all, are they available, and secondly, are they reliable? So the moment you have two variables like that, it then literally throws the cats amongst the pigeons to actually say, are we still in compliance with IFRS? Are we back to the situation of 2009 where we claimed to be IFRS compliant, but we had actually exited? This is actually noted by the fact that we used IFRS 1 in 2009. So the question that we must ask yourself is, yes, we are saying it's not the same as 2009, but were these two things actually reliable? Was the exchange rate reliable? And was the inflation rate available or reliable? And then we can then determine whether we were still IFRS compliant. The qualifications galore, the auditor never runs out of solutions. Qualifications, adverse opinions, they all happen with the auditor going forward. But the question is, were we actually still in IFRS? I think that question, we have to keep on revisiting that, because I think we should be going the IFRS 1 route. We had exited IFRS because of the variables that we're now arguing about. And then going forward, well, let's see what happens in terms of the currency, whether it's not hyperinflationary or whatever. But my view is we had exited IFRS as a nation for the past 3-4 years.
Okay, alluding to the fact, yes.
Tari, if I may come in, I want to comment on what Webster said and also what Tinashe Mreripa said. So what you see is that, I think, let me take you back to what happened in the calculation of our inflation figures. We had a situation where headline inflation, at some point, we took out quite a number of commodities, which obviously were repricing at a rate that we did not, not to our liking. And that also slowed down inflation. But anyway, it continued to obviously move because of the exchange rate volatility issues that we had. So that's number one. That's one fundamental issue to understand, that the annual inflation figures that we are producing are as a result of, number one, we've taken out certain items from the headline inflation. That's number one. Number two, we've then, remember, we had a time where instead of relying on Central Statistics Agency, we were now relying on RBZ, because there was a time when the inflation figures were no longer being produced. And then obviously RBZ continued to produce the indices. And remember, each time we do financial statements in terms of hyperinflation, we then say, go to the RBZ website and look at the indices. The issue is that, yes, they were there, but how reflective of the actual inflation inflation figures? And then we also go to a situation where the minister then said he was going to be releasing three sort of like numbers. Now he's now looking at now we are talking about ZIG, then you have got the blended, then you have got the USD. But are these currencies obviously divisible? So there's also a question about divisibility of these inflation numbers that are coming through. Which one are you going to look? Are you going to say that if I'm purely using USD, I'm going to pick inflation numbers are supposed to be overall, but here we've got blended, we've got USD, we've got that other one. Then also, let's not forget the complexity of preparing financial statements under hyperinflation. That the process almost ends up meaning nothing because of the many assumptions that we have. Some financial statements we use averages, average indices. Some financial statements, they prefer to use month-on-month numbers in terms of doing that. So these are the issues that we are saying. In its present condition, take away all the currency transition, the financial statements will cease to be useful for decision making. If you look at even bankers, I'm a banker by profession myself. You find that when you are making a decision to lend money, 60 to 70% of your decision narrows in on what? On the financial statements. But what is now happening is that bankers have now decided to come up with ways to supplement information because the financial statements are no longer meaning anything. So that's one thing that we need to be able to look at. The other issue also is to say the comparability of financial statements. I hear what the previous speaker who spoke before, Tinashe, was talking about in terms of internal discussions that we've done. But honestly, if you are going to take 2023 financial statements and you want to juxtapose them with 2024 financial statements, yes, we cannot determine that ZIG we are under hyperinflation because, of course, if you look at the variables, we have interest rates that were more than 120%. Inflation was whatever numbers we had, but right now figures are seemingly low. Do you know why that is the case? It's because there's no market information. Normally, after a quarter, you would then be able to see decisions being taken. But even before that, you find that the sentiments already they are pointing to the fact that this ZIG is not as strong as we are actually alleging. It's now trading around about 21 thereabout, but it remains to be seen. My view is that the financial statements have ceased to make any sense to anyone who wants to make a decision on the basis of financial statements. So on that note, I tend to support the position that we are restarting here. The numbers now, they don't mean anything, and we must be able to be bold and say, guys, we exited IFRS, we are not compliant with IFRS, and therefore we are starting off. I'll stop here.
Okay, I think we are now getting into it. Mr. Mukina, would you want to take on the discussion now?
Yes, thank you, Tari. I just wanted to pose a pertinent question here. I think to my fellow panelists, does ZIG eliminate hyperinflation accounting? One of the things that I have seen as a key characteristic of a hyperinflation economy is the fact that the inflation rate would have been determined over a 3-year period. Now, introducing ZIG, does it do away with what has been happening pre-March or pre-April? Does it do away with it so that we can say we've done away with hyperinflation accounting? Should ZIG be stable? I wanted to pose that question to my fellow panelists.
Thank you very much. I think I can come in there. Usually, due to significant economic factors such as hyperinflation, which IAS 29 specifically addresses, I think the conditions in the same economy that we are operating in, they are still there. And maybe, in my opinion, the purposes of IAS 29 is to ensure that financial statements accurately reflect the effects of hyperinflation on the reporting entity's financial position and performance. And now, for us to say we have exited the hyperinflation segment, I don't think it's quite true. We are still there, and we have to continue, even though we have changed currencies. We have changed from ZWL to ZIG, but the conditions, fundamental conditions, are still underlying, and I'm sure that should open the debate again.
Mr.
Chari,
Kawita, yes, Elliot.
you know what? I deliberately refrained from commenting when you said, do we have a new currency or it's a continuation? I knew someone was going to ask a question like this. What we need to understand is that we cannot, right now, we do not have information for us to say, have we exited or have we not exited hyperinflation? But what we can do is to look at some factors. So when decisions are being made for planning purposes, we look at a previous quarter and say, how did the currency behave? And what are sort of like macroeconomic fundamentals that were underpinning the environment in which those decisions were made? So if you look at the last quarter where we ended up abandoning the ZWL, what was happening was it was underpinned by quasi-fiscal operations that were happening. And I think you have heard the Minister of Finance saying that we are constructing dams, we are constructing roads, we are using own resources. What that simply means is that we're increasing narrow money, which is notes and points anyway. But anyway, we didn't have notes and points so this was just quantitative easing. So each time government comes up with a new project, they release funds, and those funds will find themselves in the market, so to speak. So what it simply means is that this is how we operated, and those were the fundamentals that were there, and together with others. Now, if you come to where we are right now, there was an attempt by the government to say, okay, quasi-fiscal operations, they've been taken away from the central bank. Those are things that are now being handled by the Minister of Finance. We have also said that in terms of the process of buying foreign currency in the market has been taken away from the central bank. Again, the Treasury is now doing that. Then we've also said that the central bank governor has also assured the nation that he is now going to be building up gold. I think we were shown a sprinkler of some gold, which we were promised that we are going to build up on that. Together with that, there's also an issue where there's a promise where he says that money, we are not going to be printing money. So these are promises that you have. And because we are at the point of crossover, we're at the point of transition, we don't have data. What we have is data and behaviors of monetary authorities and in the past quarter. But right now, what we have are sentiments. And what is going to drive the sentiment? The decisions are being made in terms of the sentiments. And I think there was an issue to say, can we trust the ZIG? Can it hold? The answer obviously lies in its introduction. The manner in which it was introduced, is it inspiring confidence? If people are not confident, they will go back to the previous quarter and say, how did we do things? So that's why you are seeing that, you saw that when I think the previous speaker once mentioned that the date where the currency was actually pronounced and the actual date where we started transacting, during that period, the governor was baffled because the exchange rate was moving, nothing was happening, no transactions were happening, banks were still configuring, but already there was a rate of 21. Where was it coming from? It was coming from the assumption that we are going to be without any credible information to show that the macroeconomic fundamentals have changed, the decision makers have changed in terms of how they were increasing money supply. We'll go back to the previous and we focus the exchange rate. I would argue that before we can have credible information, maybe after a quarter, I don't think that the ZIG is a new currency in that respect. But though technically it is a new currency, but I think from the perspective, it was just cutting of the zeros. But the true test of the ZIG, whether it can hold, will obviously come, I think, after a quarter or so.
So, Mr. Chatima, just to help from what you're saying, I've heard quite a lot, and I also don't want to get lost in the technical issues, and because I need to be more practical. So, from what you've just said, is the ZIG a relief sort of that as practitioners and as an economy we're having, such that we can then have time to then reassess our fundamentals, put in new policies to then sort of stabilize, and then we don't go back to where we were? Is that what it's a correct summary of what you've just said?
So what the ZIG has done, we have cut down the zeros. I think just like what even Ghana has done at some point, they've cut down the zeros. But what then Ghana went on to do, they walked the talk on certain issues. So for us, really, we don't have credible information, Tari, at the moment to assume that this is a relief. So we don't have information, but what we can only hang on to or hold on to is the sincerity of the monetary authorities. And this one of the tests on the sincerity is how the introduction was done. If you look at it on the 5th, I think, if I'm not mistaken, yes, banks switched off all the post machines and everything, the transactions. What happened is that if you had ZWL and you were driving, you couldn't pass through a toll gate because you could not swipe. So we took away money from the circulation. That's number one. Number two, we took away the money, and by pronouncing that, right now to just lower it to a lower level, we saw a situation where combis were now $1 because we took away the change from the system. It's what where we then say it's effective on that date and the like. So those are small little things that people add up and say, is there sincerity? Bankers were actually not aware. We're not prepared for system conversions and the like. Some of our clients had problems in trying to determine to say, are we ready for this? So those are key issues that are going to be looked at in terms in the absence of a quarter of a behavior of the currency and whatever it is. We are going to say, is there sincerity in what is being promised? So for me, I would say it is too early to say that the ZIG is taking us out. I would need a quarter for me to then say, okay, fine, I've seen the behavior of this. I've seen that the RBZ is not printing money. There's no quantitative easing. Therefore, I would say, anyway, we still have got time until end of year. But that's what I would say. Let us be cautious because of the way in which the ZIG has been introduced leaves a lot to be desired. And the governor has to reassure the nation that this is what's going to be happening. So I would want more time. I need a quarter for me to be able to say, what are the issues? And then obviously it will self-correct if people are gaining confidence about the ZIG.
Okay. Mr. Mandisoza, is it?
Thank you, Tari. And I do share similar sentiments with previous speakers with regards to our views on whether indeed the ZIG is going to work or not. I think everyone in this room's answer is we don't know. We are just observing things which are happening. And indeed, we know of the existence of a parallel market rate, which is talking contrary to the official rate. But I wanted to bring the audience to the subject. As accountants, we are faced with posting and recording transactions post the statutory instrument announcement. And whatever we are discussing here should be helping us to map a way forward from a professional accountancy perspective. So what we don't have are answers on whether ZIG is going to work or not. But what we have as a fact is that ZIG was introduced. And as a fact-based profession, we need to see how the ZIG performs in the future to make a conclusion on its inflation tendencies. And that cannot be done on the 5th of April, 2024. So as accountants, we've got trial balances to transition. How do we need to do it? So the first fundamental assumption which was done was, okay, ZIG is new. We don't know how it's going to behave. Therefore, at the onset, because we don't have historical data on the currency, it is a stable currency. Therefore, let's stop IS 29 on day one, and then work on modalities on how to transition our trial balances to ZIG, if you are a ZIG functional currency preparer, or the US dollar functional currency preparers are affected less. Should then we start to identify some abnormalities or some inflationary tendencies of ZIG. As accountants, I think that assessment can be done. My understanding is that majority of us preparers do not prepare financial inflation financial statement in our own ledgers. We maintain historical financial statements. So there will not be a fundamental distortion at the end of the year, because you can still do your inflation accounting should we feel, or should the profession sees that inflation tendencies did not die. So what we are trying to discuss is how do we transition to ZIG, and then the element of subsequent analysis of the currency should not stop. It will continue. But let's deal with how do we deal with 5 April 2024. I think that's what I wanted to just sort of bring us to there, so that we don't extend our conversation to the wider economy, but just look at the unit of measure we are dealing with in terms of our financial statements.
Thank you for that.
Tara.
No, thank you so much, William, for that drawback. I think we need to now put into perspective what we want to achieve now as practitioners, and what sort of practical challenges we're facing. And the one that I feel we have not yet touched on is the exchange rate of the ZWL to ZIG, and more importantly, to do with comparative numbers, because you know that we need to have our financial statements with comparatives. We are dealing obviously with the exchange rates at the date of the change of currency, which I think was explained in detail as to how you assess the balances and convert thereof. What then happens to comparatives, which then also have to be put in there, which I can make an assumption at the moment are in probably ZWL, which was hyperinflationary at the time.
Sorry, Tari, can I take you back a bit?
Sure.
Yes. So thank you very much for your question in terms of what do we do. But before we go there, just building on in terms of what we are trying to do, I think, so what to do with comparatives? We had the question earlier, IFRS 1, or to go via IFRS 1 or not. And I think we did, Mr. Mansoda mentioned that we debated quite extensively. And I'll confess I'm one such person who thought that is the fastest and easiest way to just, there's a statement that, financial statements have become pretty much meaningless. And that is a fact, right? So IFRS 1 does seem to be the most logical, because we are essentially saying we want to restart. However, as that obviously seems to be the most logical and perhaps easiest route to going back to some sort of normalcy, the standard itself does then kind of hamstrings us. It kind of ties our hands, because I said I don't want to put people to bed, so I'll try and be careful. But if you look at paragraph 4 of IFRS 1, it does have exceptions where we cannot apply it. As much as it does obviously seem to be the best, but we can't apply it primarily because even if the auditors had qualified their reports, if the entity in the previous year had actually inserted an explicit and unreserved statement of compliance with IFRS, then you can't apply IFRS 1. And my assumption is most entities would have had something like that. So even if you did have a qualification, the fact that we had highlighted that we are in compliance, or at least trying to be in compliance, it means we cannot apply IFRS 1, unfortunately. Although I would agree that from just looking at it logically, it seems like it's the easiest and fastest option. But the standard, unfortunately, is explicit. It does mention that we cannot in those circumstances, even if we had all these adverse and qualifications and all these modifications that we were having on our opinions. I just wanted to just highlight that, because I know it was something that we had touched on previously.
Okay. Thanks for that,
Hello?
Owen. Yes.
Just a question to Owen. What happened in 2009?
Mm.
Everyone was putting explicit, unreserved comments that they are in compliance with IFRS, but still we use the deemed cost, which is what is applicable on cessation of hyperinflation according to IFRS 1. So to me, we are in exactly the same boat. ZIG is prospective in the sense that it is a new functional currency. We don't have any comparatives on it. We must start over. However, the alternative, in order to get comparatives, there is one constant that was there before, and the constant is still there right now, which is a stable currency called the US dollar. It was there last year. It was there in the first 3 months. It continues to be there. For you to be able to have comparatives on your financials, you would need, whether it's your functional currency or it's your presentation currency, to report in US dollars to be able to have a comparative period. In terms of IFRS 1, that is what I'm thinking that we should do, because the conditions are similar to what was there in 2009. That's my submission.
Just to pick up from there, Tinashe, how then is it then brings us to the reporting currency and functional currency debate we were having earlier.
Sure.
We are now going back to the stable currency, which you've now said is the US dollar, but it was not my functional currency. It's not my reporting currency. Policy around my operations do not allow me to present it in that currency. I have to be in either ZIG or ZWL. How do I treat my comparative?
If you have to be in ZIG, you don't have comparatives, because a change in functional currency is prospective. That means when you change it, you start looking forward, you don't look backwards. A change in presentation currency, however, is an accounting policy change, and it requires you to apply it retrospectively. So as long as you are saying you are moving from ZWL to the ZIG, that is prospective reporting. There's no looking back. There is no way you can start talking. Someone was trying to come up with some formula to come up with the figure for the ZIG last year. Of course, in different forms, we have had a proxy representing the ZIG in our system, especially from last year, the pronouncement by the Monetary Policy Committee to now start using the GBDT to store value. That was around March last year. But for you to then derive a value for the ZIG for last year accounts or last year figures right up to 5 April, there is no way currently, unless someone comes up with something clever that the whole market is going to come up with, for you to be able to have any figures for January to March and any figures for last year. You have to be prospective in terms of adopting the ZIG and moving forward with the account. So you're going to pretty much have accounts for the period from 5 April to end of year in ZIG, and then probably have separate accounts covering last year and the first 3 months. No comparatives for the periods April to December.
Okay. Mr. Mandisoza, to pick up from that.
Thanks, Tari. I do understand where my colleagues are coming from with regards to the meaningfulness of financial statements given the environment we're operating in. I just want us to also think broadly as a profession. We've got preparers and auditors, and all decisions we make affect both practices. The major challenge which we had in this country, which resulted in modification, was to do with IS 21 compliance due to the multiplicity of exchange rates. And then we had the issue of the indices in IS 29. And if you look at most of the publicly available opinions, they were consistently highlighting those two areas. And we did push for a change of the wording around IS 21 to include estimation of exchange rate in a bid to encourage members to achieve fair presentation. I'm not sure whether there are preparers here who adopted the change and actually used what they were observing instead of the official rate, which to an extent would then remove the burden which we had on the exchange rate. And on the indices, we did also estimate, I think the majority of the preparers here were using the poverty data line, which was produced by Zimstat, which was then comparable across the market. The reason why I'm raising this is not just to say the financial statements were correct. We do have in this market financial statements which actually were not qualified, whose functional currencies were ZWL. And I'm drawing attention to banks. Their argument was that we access our foreign currency at official rate, and we are not exposed to all the other funny rates, and they got unmodified opinions. So if we say as a profession we are restarting, is this the sentiment which is right across? It might not be, because there are some people who used the existing IFRSs to their advantages and narrowed down their qualifications, and they have sensible financial statements. So it's difficult to just go like, let's do IFRS 1, IFRS 1. And let's also look at our financial statements. There are numbers in your financial statements which make sense, and there are numbers which don't make sense. But I think it's up to every preparer to take this opportunity to look and make adjustments for those which don't make sense, rather than to say the whole market, we don't have comparatives, we've not been preparing financial statements for the past 5 years, we are restarting. It might be a tall order for some entities who actually have a presentation and functional currency as ZWL, but had worked hard to try and make sure that their financial statements make sense. But I think we should have the latitude as professionals to make sure that we are achieving fair presentation. Should you go through the mechanisms and notice that the financial statements, the whole set, every number is not making sense, I think as a preparer, you can trigger IFRS 1. It's not something which will be mandated as a market, but it's an interpretation each and every preparer can do to say, I've done everything which IFRS requires, but these accounts don't make sense. Therefore, I'm restarting. But to debate on whether we can make it market-wide, it becomes difficult if you're looking at both of our professionals, those in audit and those in financial reporting, because the auditors could have said, your financial statements are true and fair, and then you come next year and say, I'm restarting. What are you saying about those practitioners who would say these are true and fair? Well, what would they say if you say they don't make sense? So I think it's something which we should think through as a profession to say, what are we actually saying about the opinions which were given? Because there were no disclaimers of an opinion where they say, we don't know what you're doing. They were specific to say, this may be incorrect, this may be incorrect, this may be incorrect. So if you fix those, probably then the financial statement could have been free and fair. So I think it's a bit too harsh to think of saying everyone should restart. I think it has to be on an individual case basis.
Mm-hmm.
Okay.
Thank you, William. I think it then just brings us back to there's no one solution. It now needs to be entity specific for each of the assessments. There was someone who wanted to chime in soon after William.
Yes, Tari.
Mm-hmm.
Yeah, so I understand where William is coming from, and he's quite right that we don't want to have a wholesale kind of imposition of a position. It is a very good thing that he's bringing those perspectives, that there are institutions which were able to prove. Like in our case, we actually have got a client in public sector which we managed to obviously get rid of a qualification on the basis that they were getting their money from Treasury, from the RBZ at that rate, etc. But I think the issue here that we are debating here is that This is an added layer of complexity that is coming as a result of ZIG. And the issue that he spoke about is that, so individually, entities may seem to be achieving fair presentation. But when you look at it broadly now, like when you look at the fundamentals, I like the fact that he was saying that let's go back to let's stick to the numbers, which is a very good thing. But what we also need to understand is that the numbers are derived in terms of your valuation, in terms of your assumptions. There are specific economic indicators that we use in the process of coming up with those numbers. And the question that we have to honestly put to test is to say, are those indicators factual? Can those indicators be trusted? So in that balancing act that William is proposing, there has to be also a rethinking of that, because like what Tinashe was saying, yes, the profession kept on issuing opinions in 2008 when hyperinflation, and obviously the statement of compliance was there and the like. But we then had a scenario where questions were also being raised about the role of the profession in advising the nation in terms of, to say, where we are at the moment, we can't achieve fair presentation and the like. So I think this is the balance that I want to then say, yes, we are primarily professional accountants, we deal with the numbers, but let's also be mindful of the impact of key inputs that gets into our numbers. The fact that auditor and client were agreeing, some of these things, to be honest with you, Tari, let's be frank, we are accountants here. There were so many arguments that were being put up forward, threats were being thrown around in terms of that. So some of the opinions, if we are to be honest, they are more negotiated than a professional evaluation of where the entity is standing. But of course, that is besides the point. My issue is that let's also do an assessment based on the key macroeconomic inputs that affects our numbers. Perhaps we are where we are as a result of lack of consultation by monetary authorities, by the Ministry of Finance. I've always said this, that we are always left now guessing things because we are not involved when key decisions are being made. Had the governor consulted the profession before, maybe we would have said, okay, don't do it on the 5th, do it on the last day of March or something like that. But this is the same problem that we had in 2019, where even the statutory instrument prescribed to say all assets and liability will be transferred, and they've even prescribed the exchange rate. So this is where we are. So I would also want to say, once we are mindful of the opinions that are out there, but does it necessarily, we also need to look into it to say, what was the frustration that was coming from there? I think some of the matters actually spilled into the paper, and where you would see that these were now fights between a client and an auditor. So let's also be frank now that we are accountants here and say, does the fact that somebody got a clean opinion or an unmodified opinion last year, is that reason enough to say we are still in IFRS? Like what Tinashe says, that yes, statements were being issued before, but we still found ourselves saying, in aggregate, all things considered, are we still under IFRS? So, but I also even like what William then proposed to say, maybe we may have this as an entity-specific assessment that must be done, to say when you look at the items line by line, if you believe that these numbers are not making sense, then you can come up with a position. The danger, though, of doing that is that our market is used to getting a guidance, and the guidance has been a wholesale guidance. Maybe this will be a departure from the norm, where we are now going to say, okay, this is going to be left to an entity to decide whether we are starting over or not. I'll end here.
Thank you very much, Elliot. I believe we have a lot of issues to still unpack, especially for the practitioners that are with us at the moment. Just to do some of those is to do with those with impending year ends, to say 30 April, the 30 June year ends, how then do they go about reporting? I believe you should just go for a short break, maybe about 10 minutes for regrouping and just for people to, just take a walk and unwind a bit. So if I just give it 10 minutes, and we will be back in 10 minutes time, that'll be 11:53. And then we can then pick up the discussion and obviously address most of the comments that have been coming through our Q&A to give specific sort of deliberations on specific issues for the various practitioners and to get into the other questions that we have for the last segment. So we'll be back in 10 minutes time. Thank you.
Thank you.
Thank you, Tari.
Good day to you all. I hope we're all back. Our 10 minutes are up and we've taken the necessary break that we all needed after discussing these issues and having various opinions as to where we are, where we're going, what we should do. And believe you me, I also feel overwhelmed because as a practitioner, you need to have solutions. And what I'm picking obviously is solutions will come as we go, but there's need for continued interaction, continued consultation to then come to a common ground and at least something that we can all work on. The last segment, obviously, of our webinar, hopefully will leave each one of us with some working solutions, something for us to go back to our offices and implement, and also just look back at the guidance and see how we can then modify it and look at specific issues. So I will go back to the panelists and sort of pose quite a number of questions around implementation, practicality, and what we should just go and do basically. I know some solutions may not come 100% from this discussion, but it will get the conversations going and will leave us somewhere better than we were at 8 a.m. this morning. So it's my hope that everyone will benefit and will get somewhere. So I believe one issue I had touched on, but was not, at least I had mentioned, and hopefully the panelists were looking around as to how we can assist members regarding the year ends. We've got those with impending year ends. Actually, 30 April is already passed. Some people have to report. There'll be 30 June coming up. What should happen with such practitioners? And also just looking now at the different functional currency, ZWO, for the various scenarios that are there. And hopefully Owen can sort of give us the scenario and we can then go with the discussion as we then go, and will then allow for a valid conclusion at the end of this session. I hope I've got everyone on the same page. Maybe let me start with year ends. I've got a 30 April year end. What should I do? I've got 30 June coming up. What should I do practically?
Thank you, Terry. Maybe I'll go first. So your year end is imminent. You are about to close. So what we are proposing is, first of all, you need to hyperinflate your figures, right? According to the guidance from IS 29. So you're looking at your various line items, monetary, non-monetary, and then you need to hyperinflate them, right? Up to the 5th of April. Of
Okay,
course,
sorry, Owen, just to give you, just to see clarification. We're talking about an entity that has which functional currency and which presentation currency.
Oh, thank you. So I was actually going for an entity that has a ZWO functional currency. But let me start with the easier one, the more straightforward one. We have entities on the VFX, for example, they are US, with various other entities that have the US dollar as their functional currencies. For these ones, it's fairly straightforward. What they only need to do is to introduce another foreign currency known as the ZIG. So they will find that the end of, as of 5 April, you no longer have transactions in ZWL, bank transactions in ZWL. You can have cash, which you converted that rate of, I think it was 33.9 something. So for those that have a US dollar functional currency, simply add another currency known as the ZIG, and then, just continue transacting as normal. The only complexity is the rate of 13 point plus or minus 5, or you are going to use IS 21 paragraph 19A, which says you can estimate another rate if you think that the 13 is not appropriate for you. So really, it's just a matter of adding another functional currency. If you've got a US dollar functional currency, you are adding another foreign currency known as the ZIG, and you continue transacting as normal. You are converting spot rate, those transactions and the date and everything. So it's for those entities with the US dollar, it's fairly simple. You're adding another functional currency. And then the ZWL, should ideally cease on the 5th of April. But then if maybe someone does walk in holding cash, because the banknotes can still be accepted or should still be accepted. So then someone walks in with banknotes, physical notes, then you also enter them in at that prevailing rate, which was, I think, 33. That was the final rate that was issued.
Okay.
So for a US dollar functional currency, that's how they would do it, Tari.
Okay. Then
Yes.
you are alluding now to the ZWO functional currency.
Okay, so slightly more involving this time. So I was saying, so now if you've got a US dollar ZWO, rather had a ZWO functional currency, which is now the ZIG, you first of all need to obviously produce your final TBL the 5th of April. This trial balance needs to be hypered. It needs to be hyperinflation adjusted up to the 5th of April. Remember what the standard says, monetary unit measure is at the end of that period. Why? So that you've got the value. Imagine a P&L items from last year. If you've got maybe a May year end, if you look back 7 months ago, those P&L items won't make sense if you don't hyper them. So you need to hyper them. And then after that, we then apply that rate, 2498.7242, right? And there's also a question while I'm on that rate that others have been raising to say, is that even a fair rate? And my view, I'm sure others can also chime in if necessary, but my view is that is actually an appropriate rate. Because if you look just before the 5th of April, the official rate actually did move all the way to 33,900, which was a fair rate, even if you are to compare with any other market that you may find out there. So that rate definitely makes sense because it's now a combination of 33,900 and the gold price. So that 2498 was scientifically derived and it really spoke to existing market conditions as at the 5th of April. So you need to hyper your figures up to the 5th of April, and then you apply that rate. That then becomes your take-on trial balance for ZIG. Then 5th of April, you now start transacting going forward. And that then will give you your, so for those that have a December year end, for example, your first 3 months and 5 days, you hyper that, close off, transition to ZIG, and then you start continuing. Why it's necessary to hyper? I keep saying this because that question always comes back to say, but why? It's to make sure that the figures do make sense, particularly if you look at your P&L items. So once you've done that, you start transacting going forward. The complexity obviously is then, remember, ideally, your IS-29 figures aren't necessarily posted in the ledger because they are more of a calculation. So now you're going to have your initial historical TB, your computations, your final hyper TB, which is now your take on. So these are the key TBs that you will need to have, your historical, the computations that you've done to produce your IS-29 compliant, which is now your take on. So this is what you need to have on file, because remember, you also have to have audits come through pretty soon, depending on your year end, of course. So keeping those records is going to be very pertinent for everyone, so that your take-on TB is supported. And then the individual transactions that support your opening balance will be found in the historical. So you need that calculation, which is the bridge between your historical transactions and your take-on figures. That's how a ZWL functional or ZIG functional currency entity would do it. But I must also just put a sort of like an overarching disclaimer to say, you need to perhaps make consideration around some entity-specific items that may affect you, because what if the figures really come out there and they are not making sense to you? That's when we spoke about IFRS 1, whether you want to look at that and see if it will make a difference. You've got your IS 8 to also assist you. But I think this part of my contribution now is really more relevant to comparatives. But in short, hyperinflate, convert, and that's your take on trial balance. And you start posting transactions for this current year, starting the 6th of April.
Okay. And that's now obviously the accounting side, and then the reporting side for your 30 April, 30 June. I've done that to my, I've hypered, I have my opening position. I then transact for the 1 month to April, or the how many odd months to June, when I'm then doing my reporting. How do I present that?
Okay, thank you, Tari. Maybe if I can just add on. So now that you've done that, you've transacted. So we spoke about whether we're hyperinflationary or not. We obviously have concluded that currently we are not. As people who have some scars, you can understand the skepticism, but everything that we have right now shows us that we can't make a call yet. So we will then have that hypered TB and the transactions that are now coming in ZIG. Those will then be your current year figures. Then you will close off and have your whatever month 2024. Is it that month? Is it May 2024 or June 2024? That's your current year. And remember, now it makes sense. Why? Because the first bit of the year you hypered it. So you took the ZWO, uplifted the figures, and then you posted them in ZIG. And then the ZIG came through as ZIG at that rate, which we are hoping the historical will continue. And then you've got your full year in terms of your transactions, your financial performance, that you've got your 12 months. It was part ZWL and part ZIG. The ZWL component is comparable, and you can perhaps rely on it primarily because you then uplifted it before converting to ZIG. Because you can't then go into the history because there was no ZIG before, so there's no rate that exists. But then if you take those ZWL, uplift them, convert to ZIG, then combine with the actual ZIG that are coming through since 6 April, you've got your full year. So now you've got your P&L for that full year, and then your balance sheet is obviously that snapshot at the end of the year. So maybe if I can preempt your next question, which is, what about comparatives? Right, this is 31 December 2024, and I've done this. What about my comparatives? Similarly, if your year end is December, you want to take your 31 December 2023, uplift them again to 5 April, right? Again, divided by 2498.7242, now you've got your comparative. So that's how you will then do it, to have those comparatives from last year, uplift them, because you can't go back into the past and estimate a ZIG rate. You have to bring the figures in the past to the 5th of April. And the only way to bring them to that 5th of April is to hyperinflate them using the guidance in IS 29. Then on that basis, you've got your comparatives as well. Now you've got your December 2024 figures current year, you've got your 31 December comparative 2023 comparative figures. So that's my submission there. And we, fingers crossed, I think no one on this call wants the ZIG to fail. So we all pray that it will not be hyperinflationary. There are all those measures and commitments by the central bank. And we do trust that they will do that. So hopefully we will not be hyperinflationary. Then that would then just give us the figures for the 2024 year and its comparatives. That's my submission, Terry. Thank you.
Sorry, I was muted. Thank you very much, Owen, for that. I think the practicality and application for me as if I were to be a ZWO based practitioner has come out clear as to what I should do. And obviously hyperinflation would then be key up to the 5th of April. I believe the issues to do with the rates, those can then be shared. I believe people want to know the rates of conversion and the like. They were provided, I think. I don't have them at my fingertips right now, but people in the know will then share those. Mr. Mandisota, any additions?
Thank you, Tari. I think Owen has covered the principles in detail, and I hope practitioners would understand the rationale behind what we are doing. It's all driven by the existing IFRS framework. I wanted to address a question which was in the chat, Tari, around whether there will be exchange losses or gain at conversion date. And if so, how do we deal with them? So if you look at, or if you have listened to what Owen has said, is that the period to 5 April is hyperinflated, and every line item on the P&L is obviously restated using the inflation indices, and you draw up a TB. So when you're now going to ZIG, you are just applying a rate to a balanced TB. So the conversion itself does not create gains or losses. But I am certain that there are a number of people who will then have some losses or gains because of the exchange rate movement, which rapidly moved from 18 to 33, I think, within a week. So those gains or losses will be dealt with once you have actually done your month-end close process as at the 5th before you do your hyper. Therefore, there's not going to be an exchange loss or gain arising from the conversion. But obviously, the normal movement in the exchange rate is going to give us significant exchange losses, which occur in the last 2 weeks towards the 5th of April. Then that also gives leads to a question which was also on the chat around the CPI. Because the CPI, it does not exist. We're not given a new CPI as of the 5th of April. So we've got 2 CPIs, one for the previous month, and the other for May, which was, I think, announced last week, I think. And this is my view, that it is prudent to use the CPI post the 5th of April 2024 as your CPI. The rationale, there was a rapid decline in the exchange rate and a rapid increase in prices leading to the 5th of April. If you use a previous month CPI, those attributes will not be captured in that CPI. And chances are that your CPI would understate the values across all your lines. But if you use the post the 5th of April CPI, it would be indicative of the activities on the exchange rate and on the prices leading to the date of we understand that Zimstad normally collect this data from the 15th to the 15th of the next month. Therefore, if you use the subsequent CPI, I think it will better reflect the actual the indices which occurred as at the changeover date. That's what I wanted to contribute, Tari, just reflecting on some of the questions which are coming through.
Sure. Thank you very much for that, because I think clarity was definitely required.
Tari, if I may ask a question?
Sure, Tinashe.
I like the methodology that has been suggested. However, I do have questions around the CPIs themselves. First of all, which CPIs are we using? Because the Zim dollar CPIs were suspended last year in January. Are we talking about the proxy that is now being used, which is your total consumption poverty line, which had been used to do the hyperinflation for the figures for the periods that ended, maybe 31 December or February? And then secondly, are the accounts being hyperinflated making sense? Because if I'm going to use those ones to adopt my figures for the year pretty much, I'm saying the figures are actually making sense. I don't know whether you get what I'm saying, but the usefulness of the accounts is the same reason why bankers, etc., are having to resort to other methods in order to actually get meaning out of their accounts. Is it really making sense? I'll just give you a personal experience. I've dealt with an entity, and the entity actually had negative profitability. It actually had negative liquidity, negative equity in Zim dollars. But the moment you convert the accounts to US dollars, the accounts start making sense because it was mostly being brought about by IFRS 16, which is to do with leases. And you'll find that you have a US dollar lease while you are using your functional currency as the ZWL. And when that happens, the lease liability keeps on growing while the right of use asset keeps going down through amortization. So you get to the end of the period, you have an exchange loss that is huge. And that exchange loss, because when we then disclose IFRS 16, short term, you'll find there's a short-term portion of the lease and a long-term portion of the lease. It was going to wipe out the liquidity, and it was also going to deal a serious blow on the profitability and eventually leading to negative equity debt ratios, etc. But the moment you convert those accounts to US dollars, you now have the lease liability itself in US dollars. No more exchange loss, no more nothing. And then the figures actually start making sense. So I would then ask to say, yes, I've taken the route to use my hyperinflated accounts, but are they not flawed? Are we saying they are okay? Is anyone really getting meaning? This is why I kept on then hammering to say, have we departed IFRS? We're just saying we're still there, but have we departed? Because the figures, to just put some context into it, the primary users of the financial statements are the lenders, the investors, and potential investors. And then secondary is the regulators, etc. So I'm bound to be caring more about the primary users before I get to the secondary users. Is it going to make sense? Are we going to be producing figures that make sense, or we're just looking maybe for a practical expedient for us to be having some comparatives and whatever that seem to be there on the financials? I think that would be my submission to that.
Sure. Thanks, Tinashe,
Sorry.
for having a different perspective. There's 3 hands up. I would allow Webster to come in first, then Mr. Mandisoza, and then Owen soon after. Thanks.
Thank you, Terry. I just wanted to echo on the point which was raised by Tinashe on the numbers that we are taking over into the new currency. I think if there are errors which exist, whether they are errors based on misapplication of IFRS or we're totally out, there's nothing that we could do. I think it's very important for us to ask ourselves that question. What can we do as we transit with the correct numbers? Then the second question that I also want to put through is on the methodology as well. I think just for us to think about so that we avoid audit issues at the end. Now, when we go to IS 21, where it covers change in functional currency, if I'm not mistaken, should be around paragraph 35. It specifically says that the translation process which happens on change of functional currency should be done prospectively. Now, I understand the methodologies, but the question that I want to pose through is, is there no retrospective application now which starts coming in? And number 2, would that not create further headaches for us with our auditors? Thank you.
I think you then echo an issue around applying the standard, as it says, we bring in a key issue as well to say it's prospective. So my understanding of prospective is you don't do anything on previous numbers. They remain the way they are, and we apply it going forward. Maybe Mr. Mandisoza, you can bring in your initial and probably respond to that as well.
Thank you, Tari. So I'll start with Webster's question on whether the methodology is adhering to requirements of IS 21. Indeed, it does, because what we are saying, what we are first doing is to make sure that the ZWL financial statements comply with IFRS as at the 5th of April 2024. And Owen has given the method in which we are using, which is we do apply IS 29 for the period up to the 5th of April. Then the currency conversion itself and application of the change in functional currency happens after we've closed the ZWL. So we're not going to then change anything which was transacted in ZWL in our ledgers. It remains there, it's closed. But the take-on balances are the ones which we are applying the ZIG, so that we can have take-on balances in a new company if you have created a new company. So it does actually follow IS 21. The only difference for Zimbabwe is the fact that we are applying an additional standard which is normally dealt with in other jurisdictions. So in terms of compliance with IS 21, the methodology does. And then I know Tinashe and Webster do have very strong points on the profession actually aiming to present financial statements fairly. And our view is whatever we are doing here is a road to ensure that we achieve fair presentation. The illustration he has had about if it's 16 around leases, I know it's a teething issue for most preparers, because when you do that and you've got a US dollar lease, some of the numbers do not make sense. But the beauty of our framework we are using is that it has got tools for us to use to then achieve fair presentation. You have rightly identified an area where you think there is a potential error which could have arisen because of a strict application of IFRS. And when you transition, you've got an opportunity to use IS 8 to correct an error. And the discussion, what we are discussing here is not sort of going to say, if you pick up something which is not making sense, just do it because IFRS IS 29 says so. We've got a duty to reflect after we have actually done all procedures to see if there is indeed an error in the financial statements we have, and we do have tools to correct errors. And that then does not make you discard whatever you've been reporting, but you fix whatever is wrong. So my encouragement to preparers is that wearing a professional hat, we should actually look and reflect. It is our objective as a profession to present financial statements which are fair and which are usable. If there is a reflection that the financial statements are not, it is our duty to then raise it with our boards and make the necessary amendments or corrections, and then it will get into the space of IS 8, which guides us in terms of how we deal with errors in financial reporting. But my view is, let's be very pragmatic as professionals. Let's not just behave as if everything is normal. We need to candidly challenge our figures and aim to present financial statements which make sense using the tools which exist in IFRS. Thank you, Tari.
And thank you, Ms. Mandisoza. Owen, you still have a contribution around this issue before I throw in something that a view that I've just seen.
Thanks, Tarino. There was this. I wanted to just highlight a company, then the fact that entities might need to consider opening a separate company, but I think Mr. Mansoza touched on it, so no, I don't have a comment anymore, but I do see Mr. Chatima's hand is up though.
Elliot, you can go on.
Okay, Tari, I think at this point, nothing is easy. If you look at the options that we have,
Good day, how are you?
I do share. Hello, can you hear me?
Yes, Elliot, I can. You can continue.
Yes. Yeah. So I was saying nothing is easy if you look at the options that we have and what we have to look at. So I'm for fair presentation of financial statements because we need to understand that who are the users of financial statements and how much value are they going to get out of it. Like Tinashe rightly pointed out, that we have got banks, companies would then need to be able to go to the bank and submit financial statements for assessment of credit, for continuation of accessing of credit. We've got global custodians who also wants to invest or act on behalf of players who wants to invest on our stock exchange. And I think before taking away the currency issue, we've always had challenges where when we got into hyperinflation, we saw all foreign investors actually exiting the market because they cannot understand the financial statements that we are preparing. They need additional kind of interpretation. So before, even during hyperinflation, before this currency issue, whatever, we once had a scenario where as long as we were able to provide information and fair presentation was achieved, investors were coming through. But right now, we've seen investors actually shunning our market as well. So we have got a critical role to play in the capital markets in as far as presenting financial statements that are fair, and there are going to be acquisitions. They're going to be, so all the business valuations that are going to be done, financial statements plays a central role in terms of that. And the question we must ask ourselves is to say, the set that we are going to table and say, is it a set that speaks to that, or else we are going to start looking for other variables? I think like Alex Makamre once raised in one of the presentations to say we need to look at the value of the accounts that we are now presenting. So, but having said that, I like the presentation that Owen has come up with. It's something that has to be tested on whether it will pass all respects. One key issue that Mr. Mansoza tried to deal with, though I'm still not convinced that we are able to clear, maybe let's think through about it, the issue of prospective application. I see that there's retrospective application of the standard of this change, which obviously contrary to the standard. But of course, like I'm saying, we want a solution, and there is a solution. A solution is better than no solution at all. All what we need to do now is to look at it and say, how does it present? How do we tweak it if we can? But again, which then brings us to the issue that Tinashe was talking about, that individually entities may look like they are achieving, but broadly speaking, all factors considered, we may be having challenges complying with IFRS. Then my last contribution, Tari, is on the audit side of things. I think everyone has talked about the issue of the preparers and everything. So what we need to do, Owen, probably if you are able to then comment, is to say, as we perfect this model that you have presented, we must also back to back think of the procedures that the auditors will perform and the kind of evidence that they are going to be requiring. Because I think in many cases, in most cases, a guidance is given on the preparer side. But when auditors do come, like Webster was saying, we may create a lot of audit issues. And like I said, I've summarized to say you need to do your assurance report in terms of your take-on balances, reconciliations that were done, and then also your ICT issues in terms of scripts that you ran in the system to convert the balances. If there was any assurance work that was done, no matter how reduced, you must also provide maybe a report from ICT internal auditors to show that this is obviously the methodology that you. So you need a report that you are going to show to say this is what we did, and also any other flailing issues like billing that was not done, which was done subsequent to conversion, issues of orders that were issued, and etc. So those are some of the issues that I think we may also need to be able to look at it to make sure that as we focus on the preparer, we must also understand that audit is coming pretty soon, and they should be able to have a portfolio of evidence to support whatever preparation, the methodology that would have been used in that. Okay, thank you.
Okay, thank you so much, Elliot, for that contribution. And I think that is very valuable. And like you rightfully said, the solutions are going to be coming, but they can always be refined as we get a better understanding of what is expected of us. I just saw a comment from an attendee, which then said, surely we had derived, yes, Mr. Murenda? Yes, okay. I can hear you.
I just wanted to say, so therefore, operational, right, as we move forward, probably the preparers of the accounts of the financial statements must cause the users to have a formal adoption of a new functional currency, and thereafter we do the indexation, and thereafter we change the reporting structure. That's all what I wanted to contribute on this one. Otherwise, I concur with everything else which was said by other fellow accountants with regards to the setting of different rates for different periods vis-a-vis January to March to 5th of April and thereafter the conversions.
Okay.
Thank you.
Thank you so much, Dr. Mrinda. I was then going to just go over a submission by a participant regarding the rate, and just to get the panelists' response to what has been said. So it was mainly to, well, at least the comment was, surely we can derive a ZIG rate from January to 5 April because the gold price is known and the ZW rate is there. Why should you be using hyperinflated figures instead of applying the ZIG rate for that period to convert the ZW numbers? Of course, I have reactions to this already, but I believe this is being taken from how the ZIG rate was derived on the 5th. And is that something that we can then not use retrospectively? I don't know what the panelists' reactions are to that comment. Mr. Chatino?
Tari?
Okay, so the issue here, Tari, is that when you look at, yes, the structured currency, by and large, has got a bias on the gold component on it. And obviously, I want to applaud whoever raised the issue that we can be able to derive the ZIG rate. However, we also need to understand that it is not only the gold that is part of that. So there are other elements within that within that aspect. And then also we also need to be guided by the standard to say that does the fact that this currency is backed by gold, does it necessarily mean that if we can be able to go back and still comply with the standard? So I would pose that question and say, yes, the gold is there, the structured currency is there, but at the end of the day, it's not only, if you look at the structure of the currencies, actually the term structured currency, it is not only the support, the backing of the currency is with gold and other metals. If you look at the mechanics of how the structured currency, so it's not only the issue of gold, but at the same time, do we comply with the standard if we go back and then retrospectively start calculating the ZIG value?
Okay.
Sorry?
Mr. Murenda, Dr. Murenda, yes?
I think going back is very difficult because the ZIG was not in existence before April. So hyperinflating the figures for the first 3 months of the year is fine. Then the ZIG rate is determined by the gold price in April henceforth. So therefore, I don't think the ZIG rate should be applied, or we should look for the ZIG rate from the time it was not in existence. It came only in existence in April. So therefore, in January, with reasonable accuracy or basis, is the inflation rate. So indexing the financial statements from January up to the 5th of April, it's fine. Thereafter, the ZIG rate does apply because it's auditable, it's traceable. Otherwise, before 5th of April, there was nothing in the world called the ZIG. Thank you.
Thank you, Dr. Mudinda, for that. And I think it's quite clear as well that the ZIG didn't exist before that. So coming up with the rate is more just, there's no basis for it, in as much as, yes, it may have been based on the US dollar, on the exchange rate and the gold price as at the 5th of April. But like there are other factors that should then be considered. So something that can then be traceable would be then hyperinflating the numbers. There's also a follow-up question from Owen's submission regarding the hyperinflation numbers up to the 5th of April. The question is, should this be done only for the profit and loss and not the balance sheet? Won't it impact the debtors and creditors? Or are we doing this outside the accounting system? I'll just allow you, Owen, to answer that question.
Thank you, Tari. I think for this one, we want to use the principles that are in the standard. We can't just take the entire TB and apply a rate. We have to use the principles, but we are guided in terms of how to hyper, monetary, non-monetary. So, and remember, on your TB, you've got other line items. So we want to use, I don't want to get too much into detail, but we want to use the principles. It's not a simple, straightforward calculation, but you are using the principles, looking at line item by line item, and then following the guidance based on the nature of the specific class of transactions or balances that you are looking at. That's my response there.
Okay. Thank you, Owen. Maybe also just to assist, and I can be corrected in my understanding. Maybe this question can be split into two as well, in that there's the hyperinflation of January to the 5th of April, which is obviously for the profit and loss. And like how you said, balance is as at. We then have to look at either monetary or non-monetary. Then the other issue that we were talking about, to say we're now doing retrospective application when we then hyper comparatives, and then we use the rate to then convert them to ZIG and the like. So it now depends which numbers you are dealing with. Is it the January to April numbers, or it's the comparatives when you then do the hyperinflation? So hopefully this individual can then go back and see which numbers they're actually alluding to, and then apply the standard as Owen has suggested. I was just touching on some questions I was coming across in the Q&A. I don't know if there is any submission from any other panelists regarding this issue before we probably get a summary and get other questions from participants going forward.
Yes. Hello, Terry.
Dr. Mudinda?
Yes. I think one can do his historical financial statements and then exclude the rest by comparing the index rate as at January 1st and as at the 5th of April, and then hyperinflate. And then as for the monetary assets, then you calculate them separately because there will be monetary gains and possible monetary losses. So what I'm saying basically is go to your books of accounts, do your historical financial statements up to April, then up to the 5th of April, then look at the index rates as of the 5th of April and the 1st of January. Then you have your conversion factor, but you ignore your monetary assets and liabilities, which you wanted to calculate for the monetary gains and possible monetary losses.
All right. No, thank you for that clarification. Okay. I think one question that we have not touched on is whether this, at least whether this is an adjusting event for financial statements. How do we look at this introduction? And how does it affect our financials? Is it an adjusting post balance sheet adjusting event? How should we present it in, I guess, the 2023 financials, those that are coming up, and how have people dealt with them? I'm sure with the passage of time, people can also then talk about how they have treated them.
Hello.
Yes.
I think it's not an adjusting event because you are just dealing with the currencies which have changed or inflation. Adjusting events would involve a situation where there was a material figure which could have been omitted or added, which requires the editing of a particular transaction. But here, what we are talking about is the transition from one functional currency to the other functional currency. So I think the ZIG-related adjustments are not necessarily called adjusting events, because I don't think we will have to give or to pay out anyone because of these adjustments. There will be no obligation of any nature which will result in the flow of money or flowing in of money because of the indexations. That's what I think.
Okay. Thank you, Doc. Anyone, Elliot?
Yeah, I was going to say, I think the key focus here is for the users of financial statements to say our financial statements, they have to communicate. Yes, I concur with Doc that this is an event that took place after the it depends anyway, because we can't put a wholesale kind of thing. But for those that have got 31 December year end, I would argue that this is not an adjusting event on the basis that we wouldn't have known that the currency was coming, though there were quite numerous threats about the monocurrency and whatever it is. But of course, when it comes to for the purpose of accounting, I think this will treat as a post but non-adjusting. But what is critical is to come up with these comprehensive disclosures that attempt to, first of all, you need to indicate that a new currency has been introduced, and where possible, highlight the indications, highlight the possible impact that this is going to happen, because remember that this is going to cause, because this fact must be communicated to the user of financial statements so that they know upfront. There's no use talking about it at year end. So as they are transacting, they would know that a currency has been introduced through a statutory instrument, and it's called the ZIG. What was the effective date? What are the transitional arrangements and etc. And any other legal matters surrounding the transitional process. So I think I would argue that we need comprehensive disclosure of the possible impact of this currency, so that the users of financial statements have got full knowledge of this information going forward, because they are going to be transacting in that currency. Part of the reason why I support that is because of the issue of how the structured currency actually works. This is a different kind of a currency from the ones that we have had in the past, because that is our first baked kind of currency. So that fact must also be included in the disclosure, that it's the mechanics of the currency must also be, but in a high level summary. Thank you.
Thank you very much, Elliot, for that submission. I will maybe open up for 3 participants before we get into the summary of our discussion. Hopefully that can then be delivered by Owen before we conclude. Just any 3, if you show by hand, and then someone can then unmute you at some point. And in the meantime, Mr. Sigauke, you can just take us through as people then just collect their questions. You can go ahead, Webster.
Thank you very much, Terry. So I think we have covered a great deal of what happens on the transitioning date, 5th of April. as well as towards the year end. I just wanted to raise a few thoughts in between. So during post the transitioning date, now during as we get to the January to the end of the year, what does it mean for certain contracts that are affected by the change in currency? So for example, when you look at leases, if they were ZWL denominated leases, which are now all of a sudden, they're now denominated in ZIG. What it also means is it has got an implication, because if you look at, if you're coming from a Zimbabwean dollar lease, a lot of them were variable leases because of trying to index them to cater for the inflation. But when you get to move over to a stable currency, then those indexing are likely to stop. So what does it mean on the accounting side of those particular transactions? I think the same goes when you look at your financial instruments. They had interest rates which were based on a hyperinflated currency. As you shift to a stable currency, what it means is contracts are going to be recalibrated to match the nature and value of the new currency in which they are denominated in. So what does it mean for these contracts? What does it mean on the accounting? Do we have any form of reassessments? Do we have some form of modifications which are happening? So I just wanted to raise a thought regarding the accounting post the change. Thank you.
Thank you very much, Webster, for that. I believe that's quite valid. The indexing was happening for a number of contracts, and going forward, I know it's prospective, but how then do we proceed is a very good question. I already have 3 hands up, and I will just name them in this order, and I'm sure the panelists can then take on the responses. There's Laban Shoko, Nathaniel Munamo, and Tapiwa Chiri. In that order, I'm sure they can be unmuted. Soon after, Elliot just chimes in, and then the panelists can respond before Owen concludes for the session. Thank you. Elliot?
Yeah, thank you very much. I think these are my last remarks. I think Webster did very well in alerting us to things that should happen in between. We also have got, I want to comment specifically for public sector. There are issues to do with budgets, which are statutory, and obviously, like for example, councils, central government, etc. But let me talk about councils. For example, the budgets obviously are a reflection of the outline in the Urban Councils Act and in various acts. So as a result, we must also understand that the processes that we are going to do in terms of transition must also apply to the budgets, and making sure that our budgets are converted in the same way. But again, also public sector perspective, the other issue to do is to do with orders that were issued in ZWL, but not yet settled in ZIG. Some have actually taken a position that they are converting that at the date of issuing the order, they are converting that using the ZWL to USD. They are converting that to USD, and then obviously they settle in ZIG. So those are some of the things that are coming through from public sector to say there could be significant orders that were issued, and the amounts are significant. And what you may need to be able to do is to convert them back to the USD on the date of issue, and then obviously you then pay them in ZIG if that's what's going to happen. So yeah, I'll end here.
Thank you very much, Elliot. And it's still pointing to there's no one size fits all, and each entity will have its own specific circumstance, which should then be looked into separately. Laban, I'm sure you can come in. I'm giving you just maybe 30 seconds just to be concise with your submission.
Oh, thank you, Tariro. Okay, my question is more of a practical question. So my functional currency, let's say, is the Zim dollar. And then for my bank balances, my US dollar bank balances, the IS-29 numbers. So when I convert my IS-29 number to ZIG using the rate 2.4, and also when I do the same for the same balance, for the same USD balance, when I convert it using the rate 13.5, I'm getting a variance between those two numbers. So my question is, how then do you deal with such variances?
Okay. Thank you for that. I'll just take on the other two as my panelists think over that, and then we can then have the responses at once. I hope that is in order.
Okay.
Nathaniel?
Thank you, Tari. Thank you. I want to weigh in on IS 10, which you have posed as a question. The more specific is referenced in the standard. We have 2 days, the 31 March. Suppose we have all accounts ending at 31 March. This was not existing since it was pronounced on the 5th. That's number one. So we have to produce them in the currency that we're operating because it was not existing. That's number one. Going to December could be far-fetched, but if you come to 31 March, it's more closer. Then for those which are ending on 30 April, it therefore means that they have to adjust within the accounting period to say up to 50, they have to close off, then they restate for the remaining days, whatever. So I want to weigh in to say it's not like it's going to be adjusted. It depends with the reporting period of each entity. If it's maybe May, June, whatever, they may also need to correct during the period because this would have occurred in the period in which an accounting FM is reporting. Thank you.
Thank you very much for your submission, Nathaniel, and I hope it will assist a number of other practitioners. We have our last submission from Tapiwa Chiri.
Thanks, Taro. Can you hear me loud and clear?
Yes, I can. You can go ahead.
Okay, thank you. All right, I think my it's not necessarily a question, but more for probably like as a request to the professional bodies, as if they could also consider conducting a report, sort of covering maybe the first 6 months for ZIG to show the statistics of how ZIG has also affected compliance with IFRS, as I'd also believe it would really help the external pretty much external community being, of course, SADC and also the international world, to get a picture of how, of course, the currency gives confidence in Zimbabwe in terms of financial reporting. I say this based on how most of the external parties are looking at how the ZIG has been introduced and what it's going to show. So I think also as institutions, be it some of the professional bodies, it would really be beneficial to sort of, you know, give a bit of an idea of what's really going on the ground for people out there to, you know, instill confidence as well in the economy, instill confidence in financial reporting. That's it from me. Thanks, Taro.
Thank you very much, Tapiwa. I think that is quite relevant. And it will just assist for uniformity and just a better understanding of what is really going on the ground for someone sitting some miles away. Tinashe, any immediate responses? Tinashe, can you hear me?
Maybe it's a residual hand.
Yeah, it could be. Any
so if I can just maybe answer one of the questions which was asked regarding the potential differences which might arise through the conversions of foreign currency balances if you were a ZWL functional currency entity. So I think let us refresh in terms of our restatement principles. If you are a ZWL entity and you've got US dollar balances, the first thing you do is to run your month-end close and the exchange rate modules in your ERPs. What that does is that it then brings all your foreign currencies into ZWL using the 33.9 or something, which we talked about. And those exchange gains and losses are realized because that's the death of the ZWL. So they won't be unrealized because then you're not going to have the US Zim dollar post the 5th of April. Then once you have done that, you are just merely now translating the TB to ZIG. So there won't be differences which arise on translation itself, but we need to run the month-end close module and do your your foreign currency translation module in ERP to close the ZWL. And the losses or gains are realized because that's the end of that currency. And for IS 29, let's remember that the bank balances are monetary. So there's nothing else you do to them. They are not restated as they are current. Once you have done your run of the foreign currency conversions in your ERP, you don't need to restate those balances because they are current at the reporting date. So the principles of IS 29 are going to affect your P&L, and then they're going to affect your non-monetary items on your balance sheet. The monetary items, you would have dealt with them by doing a month-end run. So I just wanted to maybe to clarify that the translation itself does not result in exchange differences, but indeed differences will be noted once you've run your foreign currency revaluation process. Thank you.
Okay, thank you, William. And I think you've also then touched a question on how to treat the conversion of assets that was then posed and what the recommendation is. And I hope you are answered, anonymous attendee, on how to treat conversion of assets, because those are non-monetary. So obviously you have to then apply the indices. Any other reactions to the comments and questions from the three, and of course any other issues that the panelists would want to highlight for the benefit of the practitioners before we get a summary and a conclusion?
Secretary, there was a question which was thrown into the chat, whose answer we don't have, around the impact of this change to the assessed losses for ZIMRA and the capital allowances.
For tax, yes.
I think it's a pertinent question. We are due to actually meet the authorities to hear what their thoughts are in terms of how we're going to transition. But borrowing from the past, I think they will have some deemed amounts which they'll come up with and will be shared with the with the market. But we do not have an answer. But I know it's a big deal for most of the preparers on the call. But Webster sort of talked to it somehow that this is going to be a huge change to many things, because we had contracts in dollars, and those need to be reviewed and redone. I think the debate we are going to have next is whether that is a new contract or is actually a contract review. My view is that chances are that is going to be a new contract. Just borrowing from what I experienced with my own loan with my bank. I was paying 50% interest, and my bank then did the ZIG conversion and reduced the interest to 20%. To me, it's actually a new loan. The characteristics are totally different from the characteristics I was experienced previously. So we have to be open and look at whether it's a new contract or it's an amendment to the old contract. But my view is most of these things have to be new contracts. Thank you.
Okay, thank you very much. So we await at least further discussion and input around taxation issues. And obviously, this is an ongoing process. It's far from being concluded. And we should obviously then expect the discussions to continue around these issues. I would ask the CEOs from the various PAOs in our panel to give maybe concluding remarks around our discussion with this structured currency. And obviously, when we go back in our various PAOs, we continue to then give submissions and pose questions to then allow for the discussion to continue. If you indulge me, Owen, just to highlight the various CEOs we have present so they can then give concluding remarks.
Thank you, Tari. So may I ask, I can see Mr. Famba, I can see Mr. Shoshe, I can see Mr. Mandisodza. I can't see the other ones, but if you are there, please just raise your hands, because some of them may actually be on the delegates link rather than the panelists link. So if they're there, I might have missed them, but I do see those three. If there's anyone I've missed, please just raise your hand. But I do see Mr. Famba, Mr. Shoshe, and Mr. Mandisodza.
Okay.
Ndituka ngubaya kunobva waonekwa
Okay, so maybe Tari, I could ask Mr. Shoshe to go first, and then Mr. Famba.
Okay, thank you, Owen. Thank you, Tari. Thank you to all participants for gracing this event, this very critical event, a critical discussion for the profession. I can only say, let's continue to rise and speak and direct policy as a profession, and together as one, and together we can be heard and be able to contribute the development of the nation, development of the economy. Let's continue to come together. Thank you to the rest of the panelists for all the contributions, which we believe are going to be put together and presented as the voice of the profession. Thank you.
Thank you very much, Mr. Shoshe. Mr. Famba.
Thank you very much, Tariro and Owen. Good afternoon to you all, ladies and gentlemen. I think we've come to the end of our discussion. I'm sure all of us would agree that we really did get a lot of insightful information that will help us to go and make some decisions as we encounter some of the issues that we've been trying to unpack, given the continuous currency changes. I'm sure we are one of the countries that has changed currencies more than anybody else in the world, and it puts us in a better picture to deal with such issues as some countries also begin to face similar challenges. In one of the conferences that I attended sometime last year, one of the ladies from KPMG South Africa said, financial reporting is one of the causes of mental health issues in accountants. And I'm beginning to see it also now, given the challenges that we are facing as a country. The reporting has become increasingly difficult because of the policy changes and pronunciations that government is taking and implementing. So I hope these webinars are going to help us all to navigate some of the challenges that are being presented by these policy changes. And hopefully going forward, we need as PAOs to engage with the policymakers so that when these things come, at least our voice and our input is sort of heard, so that then there's a bit of an alignment and between our reporting periods and requirements with what government seeks to do. Allow me just to thank our panelists. I won't mention them by name, but thank you very much, gentlemen, for the job well done. We really appreciate your time and effort to indulge in some of the issues and the questions that were coming through. We are hoping maybe this is the beginning of building a cohesive team that will be able then to assist the nation going forward in dealing with the challenges that we face. Thank you very much to you all.
Thank you, Mr. Famba, for that. And finally, Mr. Mandisodza. Okay, have I lost him? I think he's been contributing, and I think he will continue contributing going forward. But I think I'll take this moment to just thank the panelists for being with us this morning and into the afternoon, and sharing their insights and knowledge, and at least just to thrash out a few key issues on how we should proceed and how we should continue implementing this new structured currency. And obviously, we are all out to make it work, and to make it work within our reporting frameworks, within our policy frameworks, to then ensure that we are the custodians of the profession for all our users. So thank you all for your participation, and thank you to all those who managed to attend. I hope you have had a few key takeaways, and you will not go away with nothing, and you will be, at least better equipped to address the key issues. We will follow through with the questions in the Q&A, some of which were not addressed, to do with CPDs and any other lists or issues that I see quite a lot has not been attended to. So we will try through the PAOs to provide the recording, a summary, and just follow up answers to all these questions that members do have. Then we can always keep the discussions alive in our various areas. So thank you all so much. We have exceeded our time by 6 minutes, but you have all managed to stick around. So have a great day, a great rest of your day, and good luck with implementation. And hopefully you can keep the conversation alive. So thank you so much and have a great day.
Thank you. Goodbye.
Bye.
Thank you.
Bye. Cheers. Bye
Thank you,
now.
Tari.
You're most welcome, guys.
Thank
Have a good
you,
day.
everybody.
On a
Thank you
positive
for
side,
managing this very well, lady.
on a positive note, Tari, Zimbabwe keeps us up to date with IFRS. We are always reading.
So who contributed that?